Welcome back, investors, to Ticker Time News. I'm Adam, and I'm sorry about yesterday's technical difficulty with the stream ending earlier than I expected. Everything should be fine and dandy today. But one thing, I do want to start today with tomorrow and then end today with today. I know, backwards of our normal flow. But remember, this live stream is for you. So if you have a question, type it into the chat. Put it in the live chat, and we'll go over it live during the show. That's exactly what this live stream is for. I know I've got some notes written down. I want to talk about a few things, especially this one thing that's got me really twisting the gears here about the end of today. But your questions are the most important thing. So remember that. Ask them at any point during the show. Now, we need to start with a question. Was CPI data leaked right before the market closed? Well, 20 minutes before the market closed, the SPY completely changed direction, going from selling off into the close to rallying into the close. Now, typically, well, before I get to that, look at the change of direction on the chart here. I'll get my highlighter. I should have had that out already. Here we go. Highlighter. And this is the change of direction right here. All right. This is about 20 minutes before the market opened. We reached a high right here, but against this resistance zone, this channel that we were in today, and we started to sell off into the close. Then 20 minutes before the close, things turned around, and they turned around fast. This rally was extremely hot, extremely hot. Now, I want you to take your eyes over to the left-hand side of this chart. The volume shelf profile. That's the volume bars, green and red, that are coming from the left of the chart out towards the middle of the chart. They're pointing that way. It's hard to see, but at the very, very top, there is a candle there which has a tiny, tiny little bit of red versus the rest of the candle being green. Now, if you look at all the other candles, it's pretty split between green and red, mostly on the green side today because we were rallying for the most part. But this top bar occurred the last 5 minutes of the day. Now, I'm going to open this up and I want you to hear the numbers. At this price point, which was directly at the close of the day, we had 388 million buy orders. 388 million buy orders to 11 million sell orders. What? Are you kidding me? 388 million buy orders going through to only 11 million sell orders going through right at the close of today? Are you kidding me? That to me is sending off some type of alarm bells. That does not look right. That is not seen very often. We are literally, I should say, traders would never position themselves to rally mode going into such a binary event like CPI data tomorrow, which is either a 1 or a 0. Either inflation came down or it did not. Now hold that thought for just a moment. Market participants will have a spotlight on the December Consumer Price Index tomorrow. The expectation is what, a 0% or so month over month change, basically inflation holding flat. Prior reading was 0.1%. We can see it here too. The month over month core inflation, that's what I have here. There is nothing on in TradingView on their economic calendar. Inflation rate month over month, there's nothing there. Prior reading, you can see over to the right-hand side here, 0.1%. And then core CPI month over month, the forecast is 0.3%. Last reading was 0.2%, and that's for core CPI. And this drops 1 hour before the market opens. And there is some other data that comes out at the same time tomorrow, like weekly initial jobless claims. The expectation is 210,000, and then continuing claims, and the prior reading was 1.69 million, around about there. Now, look here on the chart just for 1 moment. We have inflation rate year over year, which is right here on this bar. 6.5% is the forecast here on the TradingView economic calendar. Prior reading was 7.1%. And then we have core inflation rate year over year. These will be the headline numbers that everyone sees. 5.7% is the forecast. 6% was the prior reading. And then to top off the cake, we have Fed speak tomorrow as well. The Philadelphia Fed president and the St. Louis Fed president both speak tomorrow. It'll be interesting because so far, Jerome Powell was a big strikeout this week. Nobody paid attention. He didn't talk about the markets or economic policy or monetary policy, I should say, and the market basically ignored his speech. But other Fed speak this week has moved the market in negative directions, talking about the Fed has no plan on slowing down. The Fed has no plan on lowering rates in 23, even though the forecast shows that maybe September is the time frame that may happen. And other Fed speak this week saying that the Fed's not afraid to over tighten and that the Fed may just go ahead and over tighten, which means taking liquidity out of the market and raising interest rates and holding them there at a really high rate for an extended period of time. Very interesting, right? So, Jerome Powell, big dud. Other Fed speak, though, moved this market. Okay. Then, banks, your big banks, report on Friday before the open. One item in their reports that market participants will be looking for is credit card delinquency. How high has that gone up? Because we know through prior economic data releases that credit card spending has spiked, and it has been going up now for a few months at a really fast pace. Are those credit cards becoming delinquent? That'll be a big sign to watch with the big banks. Now, let's go back to inflation and CPI and what in the world happened at the close today to cause such an imbalance of buying versus selling right at the high, right at the close of today. Bank of America expects both core goods and energy prices to have declined in December, but food inflation and core services inflation to actually remain sticky and a little high. And then we have JP Morgan Chase. I want you to look at this. Look at this with me. This is JP Morgan's game plan on CPI day. You can see it here on the left-hand side of this. We have December CPI readings, all right? That's on the left side of that line. We have below 6.4%, 6.4 to 6.6%, and then above 6.6%. And then right in the middle, we have the probability of which one will occur and what the percentage is that think this will occur. And then the right column is showing the reaction in the S&P 500. Will the S&P 500 move up or down, and by how much? So, what JP Morgan Chase's trading desk says for CPI day, since investors are largely defensively positioned, JP Morgan Chase argues that any evidence that the Federal Reserve's inflation fighting campaign is working will spark a rush to unwind bearish positions. In that case, they have a 65% probability. It is the middle right here. I'll circle it. The middle probability, 65%. Let me just draw one more line here to help separate the three. We've got our tic-tac-toe boxes. Okay, so right in the middle, there is a 65% probability that we will see a 6.4% to 6.6% read on inflation. And if that occurs, which JP Morgan Chase believes there's a 65% probability that it will fall within that range, that the S&P 500 will go up by 1.5 to 2%. 1.5 to 2% over the session. Then in second place, there's a 20% probability, which is the top line, a 20% probability of a 6.4% reading or lower. And if that were to occur, the reaction for the S&P 500 is up 3 to 3.5%. And then finally, we finish the snowman here with a 15% probability that inflation comes in at 6.6% or higher. And at that point, the S&P 500 will go down 2.5 to 3%. So this is how JP Morgan Chase is playing the CPI data and their probabilities for which situation will play out. So if we get an inline reading or slightly better than inline, the market's going to go up 1.5 to 2%. If inflation has dropped significantly below 6.4%, we're to the moon, 3% to 3.5%. However, if inflation remains sticky and does not come down, and it's above 6.6%, then the S&P 500 is dropping 2.5 to 3%. What do you think about these probabilities, and not just these probabilities, but the reaction to these probabilities? Do you agree? Let me know in the comments what you think. Now, if the fight to bring inflation down doesn't work, if it goes up this time, that's the only scenario that JP Morgan Chase thinks the market will go down. Every other scenario has the market going up 1.5 to 3.5%. That's the majority. Now, if inflation is continuing to come down, this will only further our current bear market rally. And yes, I said bear market rally, because we'll get an overreaction from market participants who also provide short covering activity, making for an ultimate short squeeze on a bullish CPI report. However, with the Fed still tightening and raising rates and holding them at whatever that rate is, the top rate, and the economy under pressure, the overall market is still in decline, no matter what the CPI report says. So that's why, even though we could get ourselves a monster rally tomorrow if CPI data comes in below expectations, it's just a bear market rally. It will not last. Now, let's go to the daily chart here. We're on the SPY. All right. Let me bring this in so we have a better look. All right. You can see today a great big hole was left. Okay. So on our way back down, we have to watch out for this hole that was created. Right. All holes get filled. If we have a bullish, positive CPI report where inflation came down, and we go up by the numbers that JP Morgan Chase is suggesting, look over here. Look right here. there's a gap directly above where we closed that needs to get filled. Another thing to point out, there's a red line going across like this. I'm highlighting it with the blue highlighter here. We stopped directly on that line today to close. Now that line is where the majority of price action took place when we were in this chop zone right here. Okay? The majority of price action took place within that zone right there. So if we get that positive, let me measure this to help you visually see this. So we closed right here. If we fill the gap that was created, when was this created? This was created back on December the 15th. If we only fill that gap tomorrow because CPI was positive, that's only a 1% gain. That's why it is really easy to see a 1% move higher or more from JP Morgan Chase because of this gap. All right. Remember, the minimum of going up is 1.5% for JP Morgan Chase from their trading desk. All right. 1.5%. That gap from where we closed to fill the gap is only a 1% move. So that's why it is very easy to say that if inflation came down and the CPI report is perceived positively, we could easily fill the gap, go up 1%, and then a little bit more. It's really easy to say that. Now, on the extreme side of this, all right, we have got 3.5%. Where does that take us? Well, 3.5% takes us directly to the anchored VWAP right here, that black line. I can't highlight it because I chose the wrong ruler there. But the black line is exactly 3.5% above where we closed today. Now, that black line is the anchored VWAP that's anchored to the high of 2022, which occurred back on January the 3rd. It's lining up. The market loves symmetry, loves things to match. I mean, it's technical analysis 101. So that's why JP Morgan and Chase can see those levels on the upside. Now, on the downside, we've got a gap right below us to fill. And me, oh my, we were up 1.25% today. If we take from where we closed today and we drop, and we fill that gap that was created. Oh, my apologies. It's just tiny. 2.5% takes us to the anchored VWAP on the bottom, which is this black line here. That anchored VWAP is anchored to the low of 2022, which was October the 13th. And if we just real quick, JP Morgan Chase down 2.5% minimum. All right. 2.5% minimum drop. That's where it takes us. So we're going to one of these anchored VWAPs tomorrow, according to JP Morgan Chase. It's really simple. All right. Let's move on here. I know. I just went through a lot, and it's a lot to take in, a lot to grasp, a lot to realize. But yeah, it's interesting, huh? To say the least. All right, let's hop over here. I want to get to your questions. Okay, Adam, can you please give me your opinion on AMD? It's at the top of the trend line. Well, let's go ahead and pull it up while I'm reading this. AMD. It's at the top of the trend line on the daily. If it wasn't for CPI tomorrow, I would assume a pullback. Okay, let's look. Oh, you exactly right. Look at that. So if we go to Monday, we see price ran up, it tagged this resistance line, and then it pulled back. Tuesday, yesterday, it didn't tag it. Today, it gaps up and opens right on it. There's a wick underneath, hanging down low, and then it closed above it. But it did close at a interesting spot, because right here, if you look on the volume shelf profile, let me move this up. It closed right on this one right here. And then if we look, there is a bit of an air gap, and then there's a second smaller air gap right there. And that's why when you look through all of this chop right here, there's a lot of holes that were left, a lot of gaps, right? A lot of gaps because of those two air gaps there. All right, so that's making sense. The air gaps, the gap in the volume show profile, stopping on a very high volume area. And if we look, what was the split here between buy and sell? 4.8 million buy orders to 4.6 million sell orders. So a little more buying happening there. Okay, let me real quick, I need to flip these back on. Okay, so it opened right above its 50-day moving average, which acted as resistance yesterday, but it's disconnected from that 5-period moving average. Okay. Okay, I've got to, that's not what I wanted. I need to open this up. Give me a quick second. I want to get to the candles. Okay. All right. Notice this candle. Let me open it up a little bit bigger. So the volume show profile, that's important to note. And the reason that's important is because of the amount of volume that came in at this particular point. Now, if we look at this candle that was created today, notice that we have been disconnected from the 5-period moving average. 1, 2, today's day 3. We typically disconnected 2 or 3 days, except in extreme cases. This isn't that extreme, because the 5-period moving average, which is the blue line going up like this, is chasing the candles. So tomorrow, we could easily see this pullback below its 50-period moving average and then reconnect with its 5-day EMA. Now, what I want you to pay attention to is the candle that was left today. So we've got a few days going up, right? And then we have the candle where there's a body up top like so, but it's got a long wick on the bottom of it. All right, that's what today's candle looked like. And then putting all the candles into consideration, I want you to look at this chart pattern. It's called the hanging man. Let me just get my highlighters here. It's called a hanging man setup right here. You have your rally, And then you have a candle that has a body up top, right? And then it's got a long wick to the bottom. It's a reversal pattern, and it is bearish in nature. Okay? So if we go back and look, that's exactly what we have right here. We have a hangman candle pattern. Now, with that pattern, without CPI tomorrow, you would expect for this to start pulling back. Even if, at the very least, it started pulling back and hanging along this trend line. Okay? Now, with CPI tomorrow, investors, market participants, I should say, because we're not just talking about investors or traders, they're not going to be rational. They're not going to think rational. If we get a good print, then the whole market's going to rally. There'll be risk on. Plus, we are in the middle of a short squeeze in small caps right now. This short squeeze in small caps has been occurring for at least 3 sessions in a row now. At least. Going back Monday, Tuesday, today, Wednesday. So with those two pieces of data, being in the middle of a short squeeze, an overreaction to CPI data, and AMD could easily push higher tomorrow. The realist in me, trying to rationalize what's actually happening here, taking out the short squeeze, taking out CPI data, or even Fed speak for that matter tomorrow, and I would think AMD is coming down. It's pushed itself up there. It does have a little, at least one data point on the chart gives you a bullish bias, and that's that the 5-period moving average is inclining, but it's disconnected, and it has been for 3 sessions in a row now. It just broke resistance and its 50-period moving average today. And if we bring this back down, you can see that that resistance, it's held pretty good. There was one period here, what was this, December 1st, where it popped above it for one day. I mean, it gapped up above it, just like it did today. But it ended the day coming back down to it and then holding on it. And then the very next day, it gaps down and creates a doji candle, which was basically a flat candle. So if you take out CPI, I do believe it would come right back down tomorrow. But if you include CPI tomorrow and the overreaction that we are bound to get, then who knows what could happen. The other thing, and I'm just trying to demonstrate here how long this trend line has been in place. We go all the way back to December of 2021. That's how long that downsloping trend line has been in place. And only recently has it cracked above, December 1st and today. But there's one other thing I want you to look at, and this is true on all the indices today and yesterday. In this short squeeze that we're getting, look at how much volume there is. There is none. Volume is below average. Today and yesterday, volume is below average. And when you have low volume, it doesn't take much to move a stock, right? All right, let's look at this. We have today, we had 44.5 million trades take place for AMD. The average is 52.2 million. So what? 2/3 the volume. And then yesterday, let's look at yesterday. Yesterday was 41.2 million versus 53 million being the average. And then if we just look at Monday, because Monday we had above average, and we had this chart set up right here, which is a reversal candle and a reversal chart setup. I'll show you right here that I'm not kidding. It's the hammer candle right here. This is what we had on Monday, where we had a few days going down, and then we had a candle with the body up here, but it had a long wick on the bottom. That's a reversal setup, hammer candle, okay? And if we look back on Monday, that's what we had. The candles were moving down, right? We were in a sell-off, but then we had a candle, right here, and then it had a long wick on the bottom. So that was the hammer candle on Monday. And Monday's volume, well, my apologies. That was Friday's candle. Monday was the gap up. Monday's volume was 69.7 million. Average 53 point, I can't see, the moving averages are in the way. 53.9 million. Okay. So let's just compare that one more time. On Monday, we had 69.7 million trades. Today, we had 44.5 million. That's a big drop off in volume. And that's because we're going into a binary event, a 1 or 0. Inflation came down or inflation did not. So I hope this helps to clarify what's happening with a lot of different stocks, not just AMD, at this particular moment in time. I hope that's helpful. Okay, let's see here. Adam, did you, I'm sorry, let me get this right. Adam, did you see your last stream? You cut out last, yeah, I had a technical problem yesterday. The internet, one of our internet extenders, it's literally sitting right beside me here on my desk, because our router is in the basement. So I've got an extender to boost the strength right here beside me. It went out yesterday, which then caused the internet to glitch and come in and out. And I lost the stream at that moment in time yesterday, and it just completely cut out. So I do apologize for that. I reset it. It should be working wonderful today, and I'm monitoring the stream. I usually do that. Yesterday, I just happened to not be for some reason, but stream looks live, looks good right now. So that's what happened yesterday. I was driving and wondering why. Yeah, that's what happened. The Wi-Fi booster, it cut out. It stopped working. Tilray. Okay, we can look at that. I do want to go through the main indices and talk about what I see and what's being set up. All right. TLRY. Small caps like Tilray are going through right now a short squeeze. A lot of these small cap companies that have high floats, high short interest, are experiencing a short squeeze. That's why if you look, the IWM, it's been outperforming the SPY on a relative basis due to this short squeeze. And it's been taking place the past 3 sessions, maybe even kicking off last Friday, the short squeeze. So that's what I'm seeing here with it being up 9% today. On a relative basis, it's going through a short squeeze. It just had earnings, what here, on Monday? Hold on, I need to get the right thing going. Earnings are on Monday. EPS came in at 5 cents, which missed by 94%. The estimate was, I'm sorry, my apologies. I'm looking at this wrong. Okay. They came in at a loss of 11 cents per share. The expectation was a loss of 5 cents, almost rounding up to 6 cents per share. They missed by 5 cents or 94%. Reported revenue, 144 million. Expectation was 154 million. So they missed by 10.6 million or 6.8%. It shouldn't have gotten a boost from a miss like that. However, since we are in this short squeeze right now, everything's going up. Everything. Especially the popular momentum stocks. Alibaba is another one. It just keeps going. It just keeps going because it's in a short squeeze. That's my take on it right now, at least. So that's what I think about Tilray right now. I mean, it is pretty cool to see it up there. However, it's in a bit of a, let me get the highlighter back. I mean, it's in right now a bit of an air gap here in price, which if tomorrow, if the short squeeze continues tomorrow and CPI data will be the reason the short squeeze continues or ends, it'll play a big role in it. And one thing to note, short squeeze. It's a misconception by a lot of market participants. A short squeeze it's not a one and done event. A short squeeze can occur over and over and over. All right. Think of it like a paint gun, a paintball gun. You load in all the little capsules and then you go and you fire off all your paintballs. Then the paintball gun is empty. What do you got to do? Well, you got to reload it, put the capsules back in it. And then you can go fire off your paintball gun for, I don't know, however many capsules it holds. That's the same type of mentality with a short squeeze. The short squeeze can occur, right? Shoots up. It can take a few days to fully develop, like a flower opening up. And then it's over. Until shorts reload their shorts on those companies. And then once it gets to that tipping point or something dramatic happens in the market, it can trigger that next short squeeze event. So there's never the short squeeze. There are short squeezes, is what I'm trying to say. Okay, CLL is gaining. All these smaller caps, same story. That's what I'm thinking right now for one of the reasons why we are seeing this dramatic tick up in these smaller cap names. Another 1.8% today for Carnival. What are cruise ships doing right now that they haven't done for the past 3 months? Well, I guess we're in winter, and maybe that causes cruise ship to go up. I don't know. Probably not, because most people take their vacations during the summer. So what is Carnival doing now that is so awesome that it's causing the stock to rip up like this? I mean, just, I can't do that here. Let me do it this way. If we look at the news, cruise stocks pop as Carnival moves to increase add-on prices. That's a good thing. That'll help increase revenue. Carnival shares rise on reports of price increases. Well, that'll help revenue too, but you got to watch for your expenses. Once loved travel stock that has lost its edge. Who knows who that is? But if we're looking for a place for Carnival to run into resistance, right? If there's something else happening here or something happening alongside of a short squeeze, I've got it highlighted here the last time we looked at it. And it really starts. Let me clear this highlighter out. I want to get this candle right. So it really starts at about 9.91, 9.95. That's the area where resistance is going to become a problem. Okay. Now, if we look at the volume shelf profile over on the left, we can see that the biggest price point, which is due to all the chop that's in the very middle of the chart, but it's sitting right at 9.6. Now, if we look just above that, 9.66 is where yesterday closed. And then our wick almost comes right back down to yesterday's closed, found support there, and then ran up. But if you really want to see what's going to happen to Carnival for the future, you've got to look at this chop box right here, okay? This will give you an idea of what happens when price runs up this far, okay? It connected. Remember we talked about its 5-day moving average? Well, if you look here, what happened yesterday, it came really close to tagging that 5-period moving average. Real close. So this extreme move, 1, 2, 3, today was day 4. And we're left with a spinning top type candle, which can be a topping candle. It basically says that investors or traders are unsure which way we should go with this stock or with this equity. But if you just look right back here, I mean, we had some stiff resistance here at 9.95. So we'll see if it can break that. The last time it did break that, it ran up, but it fell even harder right here. So I think Carnival is getting really close to the end of its run, or at least to a point where, okay, it's got to take a step back and figure out what's going on. But 9.95, that's a real important level. And it got close today, 9.90. So not quite there. So I'm still going to hold with what I've said before, that 9.95, that's important. This man knows his stuff. Thank you. I appreciate that a whole bunch. Yes, thanks for explaining. I learned a lot. Awesome. I'm so glad. Get along Ethernet cable. Yeah, what I was thinking was drilling a hole through the floor. I did this at a house before, so I can run that Ethernet cable up from the basement to upstairs to get plugged in. You're right. I really do need to do that. So get along Ethernet cable and stretch it up the steps. I actually did that one time too. Had the Ethernet cable plugged into the router in the basement, ran it up the basement stairs, and then I kept it hanging on the wall right inside the basement door. So that way when I needed it upstairs, I could just get it, open the basement door, and then run it. And then so it's not always across the floor upstairs. I would then roll it back up and leave it hanging right inside the basement door. It's crazy what you go through when you need to get something done. It's pretty cool. That's right. Whatever it takes. Absolutely. Absolutely. All right. Let's go through the indices real quick. I want to do that. And again, if you have questions, throw them into the chat. I'm happy to go over them. This live stream is for you. Just remember that. So your questions are the most important part of this show. Okay. Now, when we look at the SPX instead of the SPY, we see something a little bit different on the stock chart, okay? And that is today's candle. Remember the red line on the SPY. Now, that line, the SPY hit that and stopped. It used it as a stopping point at the close. But on the SPX, it ran up past that today to close above it. Now, like I measured on the SPY, if we go up, okay, to the anchored VWAP, which I've got to move this over so I can see, that's about a 3% move. And remember, JP Morgan Chase, let me put that there again. JP Morgan Chase, we're going 1.5% to 3.5% on the S&P 500 tomorrow. That's the majority position, okay? 3% takes us to that anchored VWAP, the black line up top. And that black line up there represents, it is anchored to the high of 2022, which was January the 3rd. And then on the lower end, let's see if we take where we closed today and we go down. All right, we got a gap right below us. When we fill that gap, it's about 1.33%. And remember, JP Morgan, they said on the low end, we drop 2.5% to 3% if inflation is hot. So half of that fills the gap, okay? That's right below us that we made today. If we go a little bit further, we go down to the anchored VWAP, that's 2.5%. And that anchored VWAP is anchored to the low of 2022, which was October the 13th. If we go a little bit further to the full 3.5%, where do we end up at? Well, we end up when we were in the ascending triangle chart pattern, okay? The support line of that ascending triangle is 3.5% below where we closed today. Isn't that fascinating? See, trading is all about symmetry, things being equal, finding common, similar, and just running some lines, right? It is just, it's incredible. Absolutely incredible. So that, I want to get the highlighter here. It is this support line ascending that we saw right here. That's 3.5% from where we closed today. So that's where JP Morgan is thinking that if we fall, that would be the area that we could fall to the furthest, okay? All right. I want to show you here. I'm going to go to the 5-minute chart because I want to show you not just the SPY, but also on the SPX what happened? Okay. What happened today? Making me wonder, well, did that CPI report really find its way out into the public? I mean, that's something if it did, right? Look at this. Guys, this is insane. Okay. The volume shelf profile. It's hard to see because it's the very top candle. It comes all the way out to here, all right? The volume shelf profile, just to help you remember, is the candles that are coming off the left side of the chart. Now I'm highlighting the candles here. And then we get to today's candle like that. Look at that. Look at that. Look how far we came out. Wait till I read you the numbers. Back to the question, did the CPI data get leaked right at the market close? Well, listen to these numbers. At this price point, okay, we had at this price point in a 5-minute period, 5 minutes, there were 2.7 billion trades. To what? 2.7 buy orders to 369 million sell orders. That's ridiculous. That's absolutely ridiculous. Okay. Now, let me double check and let me just make sure I got that number right. I could have misspoke. Okay. All right. Hold on. I did misspeak. Hold on. Let me fix this. Okay. At the close today, in 5 minutes, here we go. It was 2.7 million buy orders to 369,000 buy orders. You know, it doesn't matter whether I say billion or million and thousand. That spread between buy orders coming in the last 5 minutes is huge compared to the sell orders. There is no way in my mind that traders are going to buy in the last 5 minutes on such a binary event. When you're trading, you want an advantage. That's why we use technical analysis, intermarket analysis. We want to get an edge. We use support resistance. We use weekly expected moves. We use many different points to give ourselves an advantage. You don't rush in buying in the last 5 minutes on a 50-50 chance. You could lose it all. This is the same thing that happened on the SPY happened with the SPX. And for fun, let's go to the Qs. Let's go look at the Qs on the 5-minute chart, okay? Looking at today. On the Qs, it's not quite as bad as on the S&P 500, but it's still ridiculously lopsided. Let's go to on the QQQ. On the volume shelf profile, the candle's sticking out from the left side of the screen. The biggest candle or the biggest price point that had the highest volume was right at $274 a share. And at that point, there were 95,000 trades that were sell orders to 101,000 buy orders. So not real lopsided there. 101 buy orders to 95 sell orders. Not a big lopsided event. But when we go to the last 5 minutes of the day, 156,000 buy orders to 12,000 buy orders. It's right here on the screen. You can see it. All right, let me point it out for you guys so you can see the numbers I'm talking about. In this column right here, all right, we've got this right here. It's a VRVP. This shows you your volume shelf profile, okay? And then to the right of it, once I click to make this disappear, you'll see that there are numbers right here, okay? There are numbers in the green, numbers in the red, and there is numbers in black. The numbers in green represent the buy orders. The numbers in red represent the sell orders. The number in black represents the total number of trades that took place at that price point. So when I go to the highest volume candle, which is at 174, those numbers, I wish I could like seriously point to it here for you. Let's do, okay, I can't even do it. Whatever. All right. The green number beside the VRVP, you see 101.44K or 444K. And then it's 95.417K. That means 1,000. And then when those two numbers are added together, you get the black number, which is 196.861 thousand. Okay. When I go up here to the candle for the last 5 minutes of today, the total is 168.7 thousand. But it's 156.3 thousand buy orders to 12,000 sell orders. That's not how it's supposed to work. Not unless you feel absolutely, and I mean, there is a hive mentality of traders that feel absolutely positive that they know that this is the right price to buy at or sell at. It's just incredible. And it's the same U-turn that occurred. We're selling off into the close. I expected that today. We're going into a binary event with CPI data tomorrow. 1 or 0. Inflation went up or it didn't. I expected a sell-off after a run-up like this today. Not huge candles into the close. Go back and look at other CPI days. You don't see big candles into the close, except for one time, and I believe it was either last June or July, where CPI data did come out. And traders bought at the close in big volumes. I can't remember which month. All right, let's go to the Dow. All right. Same U-turn, except for the Dow, all right, we didn't have this big volume at the end. If we look at that candle, I mean, it's still lopsided. It was 2.7 thousand to, what is that? Oh my gosh, 0. 2.7 thousand buy orders to 0 sell orders. You don't typically see that at the close of the day. So it is just insane to me. All right, let's go look at the IWM real quick, and then I'm pretty much done for today. We talked about tomorrow right at the start of this video. So you can definitely jump into it at that point if you would like to. If we look here, I mean, we're real close to the upper end of the weekly expected move here. We're not far off. If we look at this closing candle, it is, what is that? 49.2 thousand. And I can't see the number 7,000. So 49,000 to 7,000. 49,000 buys, 7,000 sells at that point on the IWM. It's just incredible. Absolutely incredible. All right, here's the dollar today. This is the 5-minute chart. I want to go back to the daily. Actually, I want to go to the weekly. That's the most important one to look at here. Yeah, it does sound like something went wrong. Okay, on the weekly chart, let me adjust this so you can see it. And then we can wrap this up, unless you've got some questions, of course. On the weekly chart, we've got this trend line down here at the bottom, all right? It starts back here on May the 31st, 2021, all right? I didn't want to do that. Okay, let's click there. All right, I want to highlight this, and I want to make it just a little more noticeable. Okay. If you look on the weekly time frame, when it started back there in 21, we also have January 2022 and February 7th of 2022. And at those two times, price bounced off of that support line. Well, look at where the candle is sitting at for this week. Let me blow it up here to make it a little easier to see. It's nearly sitting right on that support line. So the dollar this week, it is either going to break that weekly candle support. Gotta move my chair a little here. It's either going to break that weekly candle support right there for the first time since December of 2021 when that trend line started, or the dollar's going to bounce here, pushing equities down. But if the dollar breaks this support, it doesn't look good. But still, 102.5 is my absolute limit for the dollar. If it breaks 102.5, this dollar is going to go down, and I think rather quickly. It's just crazy. Okay. All right. Well, I've gone through all of my notes that I had here today. Just real quick, since we're doing it, I'll just throw in the 10-year here so you can see that this is the weekly. Let me go back to the daily here. It's just moving sideways, not really doing anything. And then on the 2-year, it had that big move, which expansion leads to contraction, which leads to expansion. So it's in a contraction phase, going sideways, not really doing anything. So we've got that, okay? So not a lot happening there. We're just kind of waiting on the CPI data tomorrow. So make sure, if you're just tuning in now, go back to the beginning of this video, because we talked about tomorrow and the CPI data and what to expect and all of that. And we threw in some data on whether or not I think that, did CPI really leak? It could have. All of that is at the very beginning of this video because I knew that was the most important. So I threw it there first and talked about it first. So with that said, we'll wrap up tonight's live stream. I want to thank you guys so very much for joining me. It is going to be crazy tomorrow. If all those buy orders weren't just some fluke and it really turns out to be the case, then I can't imagine what tomorrow is going to bring. I guess JP Morgan Chase and their analysis here is going to be right. Maybe we do end up with a 3 to 3.5% move, in the S&P 500. I mean, they're sitting there with a 20% probability of that occurring. All right, ladies and gentlemen, thank you so very much. I'll be back here tomorrow after the close between 7:30 and 8 to talk about what happened, why it happened, and what to expect going forward. And most importantly, answer your questions, because those are the most important reason for why this live stream is even out there. So thank you guys so very much, and gals, for joining me. I greatly appreciate it. Good luck tomorrow with your trades, and I will see you in the next video.